Did you know that the majority of day traders lose money? This is according to a study conducted by several professors from the University of California who examined the trading activity of users on the trading platform Robinhood. Now, if this is the case, then why do people day trade if the odds are stacked against them? Well, the biggest reason is people believe that they can beat the odds. So in this video, I'm going to share my day trading experiences with you and share a few ideas on how you can increase your odds of success. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In today's video, I'm going to share everything that I've experienced as a day trader and in training many day trader students. Now, for those who are new to day trading, this will give you a good foundation to start from. And for those who have some experience, hopefully you can take one or two trading ideas from this video and apply it to your trading. Okay, so let's start off with what is day trading. So if you buy any type of financial instrument, whether it's a stock, a currency, or commodity, and you sell it on the same day, then you are a day trader. You don't hold any trade position for more than one day, so that's called day trading. So hence the word day in day trading. For simplicity, I'll refer to day trading stocks in this video. Next, let's talk about what type of a day trader that you want to be. Now, there are a few types. One is called a scalper. So for a scalper, you literally buy a stock and then sell it within a few seconds to a few minutes. And you typically tend to do this 50 to 100 times per day. Now, sometimes scalpers trade as much as 300 or even 500 trades per day. But essentially, what you're trying to do is capture small amounts of profits and hope all these small profits will add to a decent profit at the end of the trading day for you. Another is called a trend trader. So during the trading day, you try to identify the beginning of a price trend, whether it's going up or down, and try to capture a part of that trend. So for example, you want to find the beginning of an uptrend and buy into a position, and then keep holding it until the trend turns negative or when it reaches your price target. Another is called a news trader. So for news trader, you only trade on days when there is a lot of volatility in the financial markets, either due to financial news or company earnings, or you only want to trade stocks that have big news on that particular day. So your goal as a news trader is to try to profit from the volatility and fluctuation of the prices. Now, there are lots of other types of styles that I didn't include here, but they all have similarities. Now, all you care about in day trading is that the price has to move on that particular day that you're trading. If it doesn't, then it's very, very difficult for you as a day trader to make money. As a day trader, you do not need to do too much research on what the company does or evaluate its fundamentals. The reason is because you're really only holding the stock for seconds, minutes, or even hours. A company's fundamentals aren't going to change within a day unless you're trading company news. So all you need to do is focus on the price movements as reflected on a price chart and the demand and supply for that stock as reflected on a market depth or level 2 screen. So therefore, you need to develop the skills to read a price chart very, very well and form your opinions on where the price will go next. Now, you can learn more about technical analysis, which includes tools such as indicators, patterns, charts. And I'll go through more details of technical analysis in future videos. Now, another skill that you need to develop is the ability to determine the buying and selling pressure of a stock. So in the stock market, there are buyers and there are sellers. So what you need to determine is there are more buyers than sellers. If that's the case, then you should buy. So you develop your bias by reading what the marketplace is telling you. You can develop these skills by learning more about stock market depth, and I'll discuss this in more details in future videos. So let's assume that you've decided what type of a day trader that you want to be and have developed some trading skills. So now it's time to start trading. So at the beginning of the trading day, you need to determine the following. What stock or stocks will you be focusing on today? You want to look for stocks that either have news, earnings, good chart setups or have been moving quite actively in the past few days. Put together a watch list of 3 to 5 stocks and only focus on those stocks for the rest of the trading day. Now, there's no need for you to monitor like 10 to 20 or even hundreds of stocks on a daily basis. You want to try to find the best ideas and only focus on them. So once you have put your list together, it's time to find repeatable price patterns in these stocks. Now, I'll teach some repeatable price patterns in the future, but let me give you a simple example. I'm going to teach you a day trading strategy called Gap and Go. So here's a chart of a stock that shot up right after the market opened. So right here, it went up and then it hit this resistance level and then it couldn't go further up. So then it kind of goes sideways and then tries again. And then I put this line here. This is called the resistance line. And what you want to do is you want to buy once it breaks above this line here. And you can see here, once it broke above this line here, it went straight up. And what you want to do is if it doesn't go up and it goes lower, you probably want to take your loss right here. So if the price goes up here and goes below this line right here, you exit with a loss. Now, before you buy into any trade position, you must determine your entry price, the price that you are looking to buy, your maximum loss in terms of dollars for that trade. What's the maximum dollar amount that you're willing to risk or lose if that trade doesn't go in your favor, and also your profit target price. What's the price that you're going to exit that trade. So all you need to do is put all these orders into your trading platform and just watch to see if your orders get executed, and that's it. So once your trade gets executed, the price either reaches your maximum loss price or your profit target price. Now, if you want me to share more day trading setups in the future, please smash that like button right now, and I'll post some of the day trading setups that I teach my students here on this channel for free. Now, one thing you will learn from me is I try to keep things as simple as possible, especially for day trading. I don't try to use too many technical indicators or monitor so many stocks or try trading so many different trading strategies on the same day. I keep things very, very simple, and this is the key. Okay, so there are many reasons why day traders lose money, but according to the study conducted by the professors at the University of California, the major reason why day traders lose money is they hear about this one particularly hot stock or widely talked about, and they all pile into the stock in droves. So let me give you a perfect example. So here's a chart of the stock GameStop. It was one of the most popular stocks that many traders were trading. You can see at the beginning of this year, it broke out of this $21 range and basically skyrocketed, going up to as much as $450 before, again, very, very quickly in a matter of a week or two, falling back all the way down to about $38. So a lot of day traders were taking advantage of this up move here. When things were going very, very well, they were buying up, but then when things were going well, they were falling down, they were losing a lot of money. Many of these day traders are quite inexperienced, and they suddenly experience success right away as the stock price spikes up. But once the price falls back down, these day traders start losing money because they only know how to buy and the prices aren't going up anymore. Or they just don't know how to short a stock to the downside and make money when the stock price falls in value. Now, in my opinion, there are a few major reasons why day traders lose money, and I actually made a few videos about this on my channel, and I'll put the links below in the description. Do you know how easy it is to be a day trader? All you really need to do is put money into a trading account and press a few buttons on your computer, and voila, you are a day trader. Of course, the difficult part is whether you can consistently make money from pressing these buttons. But what I want to emphasize is that it's so easy, to press buttons that you can keep pressing those buttons more than you should, on a daily basis. So meaning that, you can potentially overtrade and make careless mistakes. You could easily lose control and disregard your day trading strategies and just keep pressing buttons all day in the hopes that you can make a profit at the end of the trading day. Next thing you know, you traded hundreds of trades, and many of them are losing trades. Let me ask you a question. You have $25,000 in your trading account right now, and you're currently in a trade where you have a profit of $250. That's like a 1% return, which is quite good. But the stock price hasn't reached your target price just yet. Now, if it reaches your target price, you would make $1,000. But you're thinking, wait, let me just take profit right now because it might go back down and I'll lose my profit of $250. So you exit the trade. Now you're happy because you made $250, but then the next thing you know, you see that the price actually had reached your target price and you would have made $1,000. Then on your next trade, you enter into a trade and it doesn't go in your direction and reaches your max loss price. So you're currently down $250, but you're thinking, well, it might go back up in my favor, so you don't exit the trade. Next thing you know, you're down $500. You feel terrible. You tell yourself, why didn't I exit when the loss was only at $250? You're telling yourself you don't want to take this loss because it was more than what you were comfortable with, so you don't sell. Now, a few minutes later, you're down $750. Your heart is beating very, very fast. You're super angry. You pound your fist on the table and you feel intense pain. Now your losses hit $1,000 and you can't take the pain anymore, and you exit with a loss of $1,000. You feel sudden relief, but suddenly you feel excruciating pain because you just lost 4% of your capital in one trade in one day. So let me summarize here. You made 2 trades and had a 50% winning percentage. You had 1 loss and you had 1 win. You had a profit of $250. You had a loss of $1,000. So your net on that day, if you only made 2 trades, was a loss of $750. Now, assuming that you continue to trade like this, do I really need to explain to you why you're going to be one of the 90% of the day traders who lose money? Let me ask you another question. Have you ever attached an emotional benefit or loss associated with your daily trading results? So let's just say you made $1,000 day trading on a specific day and you're feeling super awesome because now you can finally afford to buy that new iPhone that you always wanted, or you can afford to take your family on a nice vacation, or spend that $1,000 on whatever makes you happy. But now let's say you had a bad day trading and you lost $1,000. Now you're feeling super sad, or you're angry with yourself because you just lost equivalent to half of your rent money or half of your mortgage payment, or that vacation trip that you planned is now canceled because you lost the equivalent of what the trip will cost. Well, what you're doing right now is you are assigning an emotional and financial benefit attached to your trading. And the reason why is because we are humans and we want to feel good on a daily basis. We try to force ourselves to trade and to make profits so that we can receive that financial benefit. So let me give you a perfect example. So let's say you want the latest iPhone, but it's going to cost you $1,000. Now you say to yourself that if you make $1,000 today, you will go to the Apple Store and treat yourself to an iPhone. So you start off your trading day on a positive note. You made $500 on a very, very good trade setup that you've identified. You feel good, but not really that good because you didn't make that $1,000 yet. So you keep trading. Now, because you want to make another $500, you are more aggressive in your trading. You get into a very bad trade and you instantly lose $750. So now you're down $250. And you say to yourself, forget about the iPhone, you just want to break even on that day and get back to zero. So you feel better about yourself that you didn't lose money on that day. So you continue trading and you keep losing until you can't take the pain anymore and you stop trading. You end up on that day without an iPhone and a loss of $1,000. Now please comment below and let me know if you have experienced this type of emotional roller coaster in day trading or made these day trading mistakes in the past. Also, feel free to share your day trading mistakes that you've made. I'll see you in the next video. Thanks for watching. If you like this video, smash the like button for the YouTube algorithm, hit the subscribe button to watch more videos like this, and hit the notification button so you'll be notified of future videos where I profile the best traders. If you're looking to learn how you can be the next top trader, please go to my website, mikesir.com, to download my free ebook, Become the Next Millionaire, where I profile a few of my millionaire students.